All right, advanced accumulation and cycles. There is something that happens in our markets called cycles. Cycles is kind of this 1, 2, 3, and this is the way I like to. I always like to tell people never tie yourself to static theorem. This 1, 2, 3, 4, 5, 6, 7 that I'm going to show you is it represents the larger idea behind the picture. It represents the understanding of, again, starting to prepare your minds for the dynamics of the markets in the future. Don't ever tie yourself to these hard set rules. Rather use these hard set rules as a crutch to helping you fully see all the parts of the move. So you have kind of this thing like this 1, 2, 3, 4, 5 setup in accumulation and distribution, which leads to what's called cycles. So you're going to have something like this. You're going to have a downtrend, right? You're going to have a point in time where you have a level of support, right? This is very, common downtrend. You have a downtrend, you hold level of support. It holds through support, breaks through support, right? So this is the one right here. Number 2 becomes the float through and the break, right? So this is number 2, that moment in time where you break through trend, that's 2. Now, this is where accumulation and distribution really can define where it's going up, down, if it's broken distribution, if it's entered accumulation, really what you're kind of looking for to stop seeing downtrends or start seeing uptrends, right? So the next point of this move is once you have this downtrend that forms and you break it, right, like that, you break the downtrend, you're going to have a reaction. So there is kind of this false idea in the markets that the most money to be made is by catching these falling knives, which is not the most amount of money that can be made, actually, which is actually very relevant to our markets right now. You can't catch a falling knife and expect to make a ton of money. When you catch a falling knife like this down here, you have a very specific outcome, and the outcome is here, right? And the outcome become the valleys within the trends. So you're going to have a downtrend like this. You're going to have a valley here. Downtrend continues. You're going to have a valley here. Downtrend continues. Finally, to this moment where you break. The reward for finding this bottom can only ever be here. It can only ever be the valley that brought you there. So when you have the break of any downtrend or any distribution, as the cycle completes 1, 2, 3, 4, 5, and so forth, as the cycle completes, your only reward for catching this falling knife, which is breaking trend, can only ever be here. That's it. That is a common misconception that people, they try to catch the bottom, they try to catch falling knives, and they expect too much out of a falling knife because it hasn't started an accumulation cycle yet. And it's so relevant in our markets right now. So the cycle becomes this, right? You have downtrend, you break downtrend, you have a little valley in here. When you break that downtrend, you are going to do a couple things, which we'll dissect a little further. But at first, we're just going to kind of create the parameters of this 1, 2, 3, 4, 5. This is the valley, therefore making this point, that's the only thing you can touch. That then creates a new trend in this cycle, right? That will then come down, test this, right? Break this, reattack that valley. It will come down like this, creating a new trend, right? Like this, creating a new trend. It will come down, break that valley, and come up and attack this again. Well, what does this look like, right? Laddering. So how does laddering exist, and how does it form? And this idea of laddering up a move and creating uptrends. Well, all this is this right here. We can go just from here. That's fine. This is just an uptrend, right? Into these pivotal moments where we always see every coin kind of goes into this squeeze like this, right? Over time, it's these breakout moments. Well, this is the cycle of accumulation and distribution. So to draw that out properly, we're going to do it like this. We're going to clean this up now and do a really nice example here, just to really pin this home. I'll just do it like this. That's fine. So 1 is going to be your downtrend, right? So we're going to color code all this just so it's very easy to understand. 1 is going to be your downtrend. You are going to have an injection point, or here, let me turn off my phone here. Messages. You're going to have a level of support that catches that, and you'll have multiple levels of support oops, you'll have multiple levels of support throughout. You'll have support here, you'll have support here. And this is kind of what creates these dips as you go down. You know, you find a level of support, you come down, you find a level of support, you come down, you find a level of support. It's that moment that you float through that allows you to come and back attack this valley here, which is a reaction off this support. So therefore moving this support to that valley like that. So that's one. That's what one looks like. It is the downtrend into a point where you have created a level and you are trying to catch that level. The two, right? So two in this scenario becomes, oh sure, orange. That looks good. Two becomes where you find support and you actually break that trend. So that becomes two, right? Let's go back to this. Create just like a little valley right there in this downtrend. So that's a point where, again, it caught support like this. It had a reactionary point and it came through, and that's fine. That creates your valley, right? So far, all very kind of common sense, but at the same time, not really. Number three, this is that same situation where if you have caught a falling knife and you see a big body candle like this with a big wick down, it has touched a level down somewhere and it is coming back, holding that level and breaking through trend to have a reaction, right? So this is how you start to see the end of distribution. Three is this, where you come and attack that level. That will create your distribution cycle. That will create your, oops. That will create, I think it was this one, that's fine. That will create the kind of first trend that you make. So that first trend, that first point is a reaction off of this. This level here will set up the future of the entirety of the move. This level here will set up almost every single 4, 5, 6, 7 that you have, right? Because this is going to reject that level. Trend will not have been created at this point. So this is not here yet, but this will reject that valley coming up to it, right? It'll have a pullback and it will then start this downtrend like this, right? Then it'll start the same 1, 2, 3, 4, 5 cycle on a micro time sense where it has to find a level of support from here, right? It has to find a level of support from here, therefore creating this ladder. So this in itself is a 1, 2, 3 kind of setup here. Or if you look at it the same light as this in a basic term, 1 is here, 2 is the level that it's finding, 3 is the break here to swing back up at its valley right here, which is a microcosm of the larger 1, 2, 3, 4, 5. So this is like the fractal relevance of 1, 2, 3, 4, 5, but it will create a microcycle within it. So keep an open mind and always be looking for these microcycles, because those will always tell you this 1, 2, 3, 4, 5 in itself. So you have this first trend here, you'd have this second trend here, which would also break here to create the attack of this. All this is doing is setting up the 4 for this. So there's a 1, 2, 3, 4, 5 that exists in this 1, 2, 3, 4, right? It's just fractally relevant. So this is how you guys can start seeing moves and picking them apart in local timeframes and global timeframes to understand more of the relevance to them. And then as we get rid of all this junk here, should have just used Control Z, much quicker. As you have done this in this coin and you have come up to touch 3 and have broken this, you are then going and completing all of these parts of that move to create your next part of this trend, right? Which is 4. Right? At that point, you are continuing this ladder here. At this point, you have made your uptrend, right? You have made this uptrend like this. And this is a very common setup that we always see. Again, this squeeze, but this is what's creating it, right? And then you have kind of this squeeze where it has to break out of that trend and float to here, right? And then you have the cycle here, right? The 5 cycle, where it comes and finally breaks a point. And the reason this happens like this, 1, things have to confirm an uptrend, and this becomes 5, which is right here. And so this would be 3, this would be 4, this would be 5, this would be 6, and so forth. But the reason it does this is because it has to create a liquidity balance in the books, or a short balance in the books. What that means is that if there is, I'm going to get rid of all of those. Okay, that's fine. If there is, oops. If we have an uptrend like this, and there is shorts here for 25%. And then your next long to short position is here at 19%. These are positions that are going to be always liquidated out. One, because there is specific criteria that happens, and this is why these patterns form, right? There is traders who want to make 10%. There's traders who want to make 5%. There's arbitrage. There's market makers. Market makers is a big part of it. Someone actually talked about that last night in chat, which is interesting because I don't talk about that much, but it makes a difference in our market. There's market makers, there's contracts, there is arbitrage that happens, there is people who want to take profits. 13% is great. I myself would take 13% profit all day long instead of trying to risk it to this valley up here and extend that 13% to 26%, right? It's the same ratio of gain of 1-to-1, where this is 13% and this is an additional 13%. It's the same thing. The ratio is not skilled in your favor. So when you can take the same ratio of trade and guarantee it, it doesn't make sense to stay in the trade any longer than that when the risk outweighs the scalability of the trade, right? And then you have something like this, so 6%. And as profits diminish, the short contracts don't execute. So that's this whole idea of exhaustion against this level, where you're coming up and creating this cycle of accumulation and distribution ending. That's kind of why these patterns happen, right? That's why those patterns happen. So to understand this now, I'd like to go to an example. Ooh, I did this a bit close. Let's move this over here. I'll show you guys an example of this. And I can do it on ontology. If anybody has a chart they prefer, it doesn't matter to me. I just picked ontology, but if you guys have something you prefer, just let me know. Let's go to the, might be easier to see on the daily, or we could say on the 4, it doesn't really matter. Anyways, this is a very common thing, right? You have kind of this swing to swing moments like this, right? You have swing here to swing here, which creates this trend. And this is that exact same thing we just looked at. So it's like, we might see more of it on the 4. I guess we'll go to the 4. It's fine. And where's the replayer 2? It just even started at the beginning. So this becomes that same distribution and accumulation cycle. We'll fast forward it a bit here until we actually have the trend created. No point in doing this before that. So fine, that's good. Trend is created there. So then you would have this other trend that's created as well. So even from this in a micro time sense to this here. So breaking this trend becomes a matter of holding levels of support from the past, right? So you'd have something like a level here, you'd have something like a level here, or the leg of the move here. We'll just use the leg for now, that's fine. And this kind of becomes that point where you're looking at distribution actually ending properly, right? So you're looking at this point of distribution ending, and in this moment, it has to attack the larger valley that brought it there, which is this. If it can't attack this, if it can't come back and back touch this, then that is just the same thing as laddering down. Like, we already know this term of laddering from here, and you ladder to here, and you ladder to here. It's the same thing as laddering down. It's just now you're starting to see how to create ladders instead of just understanding, oh, there was a ladder there, or oh, there's a ladder coming up. What does that mean, right? Now you are understanding how to create your own ladders instead. Instead, it compresses against trend, right? So it has this moment where it compresses against trend. Right, which you can, definitely don't want to draw there. So you can see that it never could actually back attack this valley, just like right here in this moment. It could never back attack this valley. It could never back attack this valley. Instead, it's trying to catch support to see if it can support the move through the trend, right? Catch support, very common basic, back attack the valley, therefore starting a distribution ending cycle. So that's fine. This never breaks. This never breaks. And we don't actually even need to see where the supports are for this. You could just actually mark the valleys and look at the reaction of the move against the valley. So here's a point where it is breaking a microcycle of this, right? So you have the swing to, you have the swing to swing like this, and it is trying to break this cycle. So this is 1, this has found support off something from here. 2, this is now trying to attack this to create the next trend like that, right? So in this moment, you would have that, you would have this, right? And as you step through this move, you're going to get a reaction through trend, right? And you can already see this is laddering down. So this actually isn't even able to technically get out of distribution or exit distribution. This is already failing before it even is attempting. People will mark, they will mark this trend and they will say, oh, we're breaking trend, let's see what happens. It's already failing. You're already laddering down. You haven't even back attacked the valley. If you can't back attack the valley that got you there, the move is failing. So in this moment back here, this was kind of the entry to attempt to back attack this valley that created this distribution cycle. And remember, this is just a microcosm or a fractal move within the larger piece. Like this would just be a 1, 2, 3, 4, 5 trying to confirm out to get to this trend out here, not necessarily this level. Don't disregard that level in the larger picture. But this is just trying to fractally end some type of local distribution to target the larger ending of distribution. But you notice it's going to fail down because it's just not, oh, like we already know it's going to fail down. We saw the replayer tool, but not the point. The point being is that it actually can't break this distribution channel, right? And then it's going to have this, but this move is already laddering down. The theory of laddering down is that you are unable to retest the moves that got you there, right? So this is already laddering down in every time sense. So you are already failing this move, whether you like it or not. There is no succession in this move. That's it. It is going to fail down against this. And you can see why it's failing here and how that was created against here as to what would be normally viewed as just some arbitrary trend. And you wouldn't understand, okay, well, why is this one trend? Like what created this trend? Because anybody can just draw the trend line and say, oh, well, this is the trend it's following. Well, yes, I mean, this is basic geometry. We can see trends on our charts all the time. I can go over here and say, oh, look, there's a trend right here, right? And say, oh, of course it failed that. Look at that trend. So it's not important to see where it is. Like, yeah, there's a trend here. Of course there's a trend there. There's trends everywhere. And they all get respected and tested and touched for a different reason. But it's the understanding of why this trend exists, because this is a point of failure in this move. So advanced distribution becomes this very tough game of understanding a larger theory and concept that's happening. So this trend, what would look pretty ambiguous as to why it exists, actually has a very specific reason and a very exact reason actually as to why it does exist, right? So we're going to just delete this and this here and this here. And so you guys can see the ladder that's already happening. We talk about laddering up all the time. Well, we also have laddering down too. Ladder down to create these micro moves, to create the larger ladder down from here to here, right? Which is just the failure of these local parts of the move, right?
Hey everyone, how's it going? As you know, I'm now giving out some of this content for free that I was otherwise charging for the past little while. Drop a donation, subscribe to the channel, join Patreon. You'll get access to Discord. Great way. Lots of top level traders in there, people who are doing this for a career every single day. So go to Patreon, join a tier, get access to Discord. Go on Reddit, talk about future of trading, talk about the science of trading, talk about cotton candy, socials, everything you can. Let's help this thing grow. It's the way you guys can thank me for giving out this content for free that I was otherwise charging money for. So I'll leave a Bitcoin address on the screen. I'll leave the Patreon address on the screen. Just do something to help out. Okay, thanks guys. Take care.